Hi, my name is Vinay Thapar. I'm Co-Chief Investment Officer in the U.S. Growth Equities Division at AllianceBernstein, along with Lead Portfolio Manager of our Global Healthcare Portfolio. A lot of clients have asked me about why healthcare is an exciting area to invest in or why they should have exposure to it. And I would say a couple of things. The first is one of the really unique things about investing in the healthcare sector is its combination of having both defensive characteristics and offensive characteristics. And what I mean by that is in periods of economic uncertainty, healthcare provides a ballast. Everyone will have to go to the doctor's office. Unfortunately, we'll have to get surgical procedures done. We'll need prescriptions. And so this means that there's inelastic demand for healthcare and healthcare services. So this provides some defense in times of economic uncertainty. On the flip side, there's a lot of exciting growth opportunities that are present in the sector. And to name just a few, something like surgical robotics, which is having a profound impact on the way people have surgery done. It lowers complications, it lowers length of stays at hospitals. And so it's a really exciting area, which we, I think, are just at the beginning of. Most people associate the innovation in healthcare with biotechnology. We certainly think that is an exciting area. Our view is that it is very difficult to predict which of the innovations in biotechnology will ultimately come to fruition. And so what we like to do is to invest in these businesses where the existing base business is profitable, but that you can acquire the pipeline as a call option. A great example of this would be our investment in Vertex Pharmaceuticals, which has a number of products to address a rare disease called cystic fibrosis, but an entire pipeline behind it that we don't think is reflected in the valuation of the company currently. And then the last big theme that I don't think is talked about often enough is technology. It has been far easier for us to order a meal on our phone than it has been to access the healthcare system. That's changing through companies like United Healthcare, which are allowing members to talk to their doctors through their smart device, and also developing software to help providers identify patients who are at risk for a bad outcome, and thereby allowing interventions earlier, which is good for the patient and good for the healthcare system overall. We think that the use of technology will continue to increase. Our focus has always been on acquiring that innovation as cheaply as possible and with an existing base business which provides a level of profitability and a margin of safety. In the short term, we think healthcare is an exciting sector that investors should have exposure to. It has that level of defense, so we're certainly in a period of economic uncertainty. There are lots of questions about inflation. There are lots of questions about whether we go into a recession, both in the U.S. and globally. And what I would say is that healthcare should largely be immune to these sorts of pressures, provided you're invested in the right business. So the businesses that we invest in have pricing power, competitive advantages, and high barriers to entry, which make them less dependent upon economic cycles and also concerns around inflation. Healthcare, at least to date, has been a very strong performer relative to the broader market. So this would provide some evidence that investing in the sector in periods of economic certainty has been a good strategy thus far. But more importantly, when you look at many of the businesses in the sector, and at least indeed the ones that we invest in, we're looking for a couple of characteristics that we think help insulate the portfolio against macroeconomic challenges. The first is profitability. We want our businesses to generate high returns on capital relative to their cost of capital. So in other words, they're creating economic value for the consumer. The other issue is that we want them to create efficiencies for the healthcare system. It's just not enough to make a product that is good for you to produce. You obviously have to make one that benefits the patient, But the last piece is you've got to price it in a way that creates efficiencies for the healthcare system. And then the other piece that I would just point to is just the growth. So you're not investing in a sector which generates a lot of free cash flow, but then doesn't have any sort of tails to that durability. These are businesses with very long reinvestment opportunities and very exciting reinvestment opportunities to boot. We also look for businesses that have very strong balance sheets. So we like these businesses to be able to fund themselves, which thereby reduces the importance of large amounts of equity grants or large amounts of debt or leverage that can sometimes impede shareholder returns. So the main risks of investing in the healthcare sector are really two things that I would key in on. The first is policy. I think that that's an existential risk of investing in the space. It is quite clear that changes need to be made to the U.S. healthcare system. Our focus is on finding those businesses that generate innovation in a durable way that benefits not only the patient, but also the healthcare system. And we do that because over time, we envision a world where, particularly in the U.S., regulators will more keenly focus on those companies that are driving value for the overall healthcare system. So we want to be positioned for that already. We have a number of companies in the portfolio that do this. One again is United Healthcare, which is trying to lower medical costs for its members through the use of technology, through creating a captive healthcare system where you can go to a physician that is employed by UNH, you can go to an ambulatory surgery center that is employed by UNH, and this all helps in closing gaps in care, ensuring quality, and most important, ensuring value. One of the other big risks in healthcare is this notion of binary event risk. Many managers in this space try to convince clients that the best way to invest is in companies that have a lot of binary event risk, and that the managers are better at predicting which of these scientific events will succeed better than the client. And we just don't think that's true. The data, in fact, has been quite clear that the odds of success in a human clinical trial are as low as 8 to 13%, which means that 90% of the time, these companies are going to be wrong. So that the idea that a portfolio manager sitting behind a Bloomberg terminal can better predict which one of these is going to work really doesn't strike us as a rigorous process. So what we do is we look to minimize that risk through investing in businesses that are profitable today, that aren't dependent on any of those scientific events being successful for the long-term health of their business. And we seek to invest in those pipelines as a call option where we can acquire it for free and then don't have to make the assessment around a particular drug. So it's really about profitability, durable growth, and acquiring optionality at the right price that we think leads to long-term success. So the strategy is differentiated by its focus on profitability and growth. We think many managers in this space spend a lot of time trying to predict scientific success, and the results, quite frankly, in our view, have been mediocre. One of the unique things about investing in healthcare is how little attention basic tenets of finance get in portfolio management. So what I mean by that is if you focus on a business that generates high returns on invested capital relative to its cost of capital, and is taking those profits and reinvesting them back into the business, they are compounding their results in a high quality way. And when you find businesses that fit those characteristics, if you can invest in them at attractive valuations, we strongly believe that you increase your odds of long-term success. It also helps mitigate in periods of economic uncertainty where the strong balance sheets, the capital efficiency, the long-term reinvestment opportunities, can over time prove to be good characteristics for investment. A couple of examples of these include Vertex Pharmaceuticals, which has pioneered new therapies to address a rare disease called cystic fibrosis. They were the first biotechnology company to really get at the underlying consequence of cystic fibrosis. They were the first company to address the underlying cause of cystic fibrosis. It's had a profound impact on patients. It's reduced hospitalizations by 50 to 60%, the need for lung transplants by a similar rate, pulmonary exacerbations or infections in the lung by similarly high rates. So it's really a profound drug, and you have patients who couldn't work before who are now going back into the workforce. As a function of that, though, the business has become really an outstanding business, generating very high rates of return on its invested capital, with a long runway of growth since the patents for their products do not expire until the mid-2030s. The other one I would point to is Zoetis, which is not often thought of as a healthcare company. This company is the largest producer of animal health medicines, which spans everything from medicines for your cats and dogs all the way through to vaccines for livestock. What makes this an exciting investment opportunity is it's not exposed to healthcare policy, since you're dealing with animal health and not human health. It's not exposed to reimbursement issues. There is a lot of innovation that we think is yet to come in that space, which makes it a very attractive investment opportunity for us.
I'm Dan Rorty, Chief Investment Officer for Sustainable Thematic Equities at AllianceBernstein. I think the first thing that a lot of investors think about when they hear the word sustainability is climate change. And for good reason. Addressing climate change is a critical goal that's captured by the SDGs. But that's not the only goal they address. Health is another key concept addressed by the global goals. We don't have to look any farther than the global pandemic we've all been suffering through for the past few years to tell us how important health is. But even before the pandemic, we know that less than half of the global population was covered by essential health services. That includes things like immunizations, reproductive health, and the provision of just basic medications and treatments. In our portfolio, we focus on three main themes: climate, empowerment, which deals with inequality and improving livelihoods, and of course, health. So these are all areas where we see vast needs on a global basis, but also vast opportunities for the private sector companies that can effectively address those needs. So each of those three themes can play a key role in an investment portfolio. Within the 17 SDGs, number 3 is the main health-related one. It says, ensure healthy lives and promote well-being for all at all ages. So clearly, sustainable development isn't just narrowly about the climate. In fact, I think it's fair to say that global sustainable development isn't possible at all without global health. And I also think that a lot of investors find it very surprising how far beyond the boundaries of the traditional healthcare sector that investing in the health theme actually involves. Health is a very, very broad theme. Within the more traditional healthcare areas, we're focused on companies doing two primary things: broadening access to healthcare and medical innovation. We can think of those as healthcare access and healthcare success. Access addresses whether patients can get the drugs or treatments they need for their disease. Telehealth innovations are an obvious example here. So are retail pharmacies and hospitals, and also diagnostic tools that increase the efficiency of medical professionals and allow them to see and treat more patients than they otherwise would, and at a lower cost. Success has to do with how effectively we can cure disease. Traditional drug and vaccine manufacturers are examples here, but so are some more exciting and growthier companies in the personalized medicine and genomics space. And then we can also think about health outside of the traditional healthcare sector. SDG number 3 may be the one that has the word health in it, but a quick look at the other 16 SDGs shows how deeply connected the entire agenda is to the concept of health. You can't have healthy lives when there's extreme poverty. That's SDG number 1. Nutrition and food security is SDG number 2. Those are key to good health. Clean water and sanitation, which is number 6, is essential for health. We need cleaner energy, which is number 7, and improved air quality to improve health outcomes. Maternal and women's health issues are addressed in SDG number 5. People's living standards and housing, number 11, is related to health outcomes. Achieving economic growth more broadly, which is number 8, requires a healthy working population. So again, we can see how health is a very, very broad theme. We define sustainability primarily on the basis of what products and services a company sells. We also consider company behavior, or how they operate their businesses, before we make any investments. But our definition of sustainability revolves around our study of the SDGs and the products and services companies sell. In our taxonomy, we identify over 40 products and services that help accomplish different health-related social objectives. We think the investment opportunities associated with investing in health are substantial. Global spending within just the more traditional healthcare industry has more than doubled in real terms over the past few decades, reaching $8.5 trillion in 2019. That's just a little bit below 10% of global GDP. And obviously, if we then add in all of the related areas like agriculture and clean water provision, those numbers go much higher. So health is a very large theme in an economic sense that we think investors can't ignore. But as with investments in every sector and every theme, there are always important risks to consider too. From an ESG perspective, some of the things that we look at include product safety. Obviously, safer products will lead to better health outcomes. Product pricing. This is important everywhere, but probably especially important in less developed countries. You can have effective treatments, but if people can't afford them, then they're obviously not all that effective. Human capital. We see this in a lot of high-tech industries that are very R&D intensive. In those industries, and healthcare industries definitely qualify, there's very high demand for specialists and knowledge experts. Corruption and bribery is next. Again, this is something we see in many industries. There are opportunities within healthcare to defraud the governments for medical reimbursement, for instance, or to secure contracts to supply hospital systems. This can negatively impact the quality and the price of healthcare delivered. And then the final risk we'd cite is data privacy. Healthcare providers know a lot about the people they treat. It's very important that they have effective systems in place to safeguard that information. As sustainable investing has grown rapidly over the last few years, one of the issues that investors are particularly interested in is the notion of greenwashing. And just like in a lot of other areas, we do see some greenwashing in the healthcare space. One specific area where we sometimes see it is with drug efficacy and drug pricing. So companies can paint a very flattering picture of efficacy in their advertisements, which just isn't always true. And there's always a risk that companies paint overly appealing pictures of themselves in advertising and shareholder responsibility reports, while at the same time maybe exploiting certain populations through excessive pricing. The trade-offs between contributing to healthcare access and maximizing profits is something that companies have to balance and that shareholders need to monitor. The arrival of successful COVID vaccines at the end of 2020 was a massive positive for society, but many of the companies that had benefited from dealing with the pandemic, like, for example, diagnostic and lab testing companies that provided COVID testing, it created some risk that investors might start to focus elsewhere, like, for example, in companies that would benefit from society reopening again, like restaurants and airlines. A lot of healthcare companies had seen above-trend profit growth during COVID, and their valuations were bid up to relatively high levels by historical standards. So while we continued to like the long-term opportunities for companies connected to the health theme, the risk-reward profile had deteriorated somewhat. Today, however, after the recent pullback in many higher quality health theme names, we decided the time was right to put it back in the portfolio.
投资一定有风险，基金投资有赚有赔。申购前应详阅投资人须知或公开说明书。